Hello guys, and welcome back for a new video. So today we are gonna talk about the mitigation process in the market. So in the previous video I showed you the theoretical aspect about the mitigation process, and today we are gonna go through the real market to show you some real example and how to use it and which time frame you can use to make the mitigation. So for the example here I will show you a mitigation in M15 and in M1 to show you how it works and how you can use it at your advantage. So okay, we are gonna start by the EURUSD here. So I'm gonna show you the mitigation with the M15 and the 1 minute time frame. So we will go into the 50-minute time frame to show you. Okay, so we were clearly in a bearish trend, right? And as I told you before, the market moved from a liquidity pool to another to rebalance the price. So here we were in a bullish trend, right? And we will start our mitigation by this point here. So price comes back here in an M15 supply after touching an M15 in the month in a bearish market. So here we can see that the price makes a change of character to the downside, right? Market reacts to maybe a 1 hour order block or something like that, but it will gives us liquidity for later to use this order block. And now okay, so I have my mitigation here in the 50-minute time frame. So what it gone into the 1 minute time frame. So I will just play the market here to don't be so far. Okay, what can I see in the 1 minute time frame? So market sweeps liquidity here, right? Then market make a change of character by this point here. Yep, just at this level here. Market reacts probably to another block into this area, maybe in second time frame. Market breaks structure, come back to mitigate the M1 supply. Market breaks structure, creates some liquidity, come back to mitigate our supply. Oh, maybe it rests open 1 pip or something like that, but in 2 minutes it mitigates. Here market breaks structure, come back and mitigates. Market breaks structure, creates liquidity, come back, mitigates. Market breaks structure here, come back and mitigate. Here we have equal highs. Market come back here and mitigate the level. We'll check with a quarter to be sure. Maybe in 2 minutes or something like that too. We'll check. Yeah, which rests us on the market. So sometimes you will see that the market will gives you like that some imbalance. Okay, it's not a problem. It can be used as liquidity for later for the price, but you can also continue to follow the order flow, because if price come back, sweep this liquidity, and after break structure it create another level, and as you can see here, market sweep liquidity, create another block here. Price mitigates this other block, break structure, come back into those other block here, and he is able to break the structure without coming back into this other block. So if you have those kind of things, if price doesn't come back into your other block, watch what the price do after. If price breaks a little structure like that, come back into the other block and mitigate and continue its road, you can follow it, but you will not take a trade on this other block here. Here you have to wait a confirmation that the price has the mitigation needed to continue the move. So here price mitigates this other block, break its structure, and after come back into his other block here. Up. Okay, same stuff. Now here, if I come back into the 50-minute time frame, I don't put all the stuff to be able to let something. So here what we have, so Okay, that's pretty perfect. We have a change of character to the upside here. This change of character creates another block above this point here. Other block gets mitigated, and price comes back into this demand area with liquidity. If I come back now in 1 minute, we can see after this M15 demand that the supply in M1 start to fail, right? And after price can rise. Okay, perfect. After price can rise until is other block. So here price taps maybe into the 1 hour other block. Yes, maybe. Yep. And if I go into 15-minute time frame, yes, I can see that price here come back into this sell to buy here. But okay, we'll follow the M1 minute here, 1 minute time frame, and here same demand here start to fail. Just here demand start to fail. M1 start to take control of the market here. Okay, same stuff here. So price doesn't really come back into the other block here. But in this case, I will preferably wait because we have still imbalance into those candle here. And so I would prefer to wait to be able to catch a better move. But if price do things like that, up, yep, you know, here we see that the price is creating trendline liquidity here by breaking structure, and you know it never comes back into the imbalance here, and so that's why we wait here. And up we have also this other block created. Why this one is created is valid because the other block here can be also all of those stuff here, and so price comes back to mitigate it, so it is a valid other block to follow after. Okay, supply 1 minute. Price reacts here, as you can see. Then here we have a last demand in control. Demand fails. Supply respects. Price rests some liquidity, but as I told you, price comes back into is big is unrefined order block. Sorry, I didn't add my word up. Just put M1 here. Okay, perfect. So here we have another block here, valid other block, but we have still a little bit imbalance, but we know that price reacts from maybe a higher other block. So now we wait, so we react from a big supply, and so we will play the price until the next supply, because we are in a bearish market, right? Up, as you can see here, it builds liquidity for later, okay? As I told you in the video, when you have mitigation like that, it creates side liquidity that the price will use for later, and it's absolutely the same here, but in a lower time frame. You know, you have mitigation, big sweep, and then price falls down. Here price breaks is a swing structure on the left here. Same every time. Price will not every time respect your supply for sure. So here price let imbalance. Okay, we have imbalance between these two candles. Here price reacts from this one. Price mitigates here this one. And now that we swept a lot of liquidity here, it's more easy for the price to go down because it has a lot of buy side liquidity, which allow the price to sell a lot and to make big moves to the downside. Here same mitigation, but we have still many imbalance, so the price can just mitigate here or can also use this level for liquidity for this one here. Price don't need it because of the big sweep of liquidity that it has here. Okay, now if I take a look back and go back into the 50-minute time frame, so as I can see, price taps into an M15 supply, follow the M1 supply order flow until an M15 demand which breaks structure and with inducement. So we have all of this inducement for the demand just here. Price strip this liquidity, comes back here into a higher time frame level, but I have my refinement for a reason. Okay, price can come back after and take the little imbalance here as liquidity to go deeper in the market later. And so here we bounce into the M15 supply, bounce into the M15 demand, come back into a nighttime flame supply. We follow the M1 mitigation until the next M15 demand here, because we are in a bearish market. Okay, perfect. Price reacts up. We'll pray the price all the leg to show you all the stuff. Okay, perfect. So here we have our big leg. So as you can see, price reacts into the M15 demand here, creates a big liquidity trend line, traps everyone into this leg. We'll go in 1 minute. Traps every people into this leg. Okay, let me look for something that we can use to flip something. No, but here with this big manipulation, we can see that price here makes a shush to the upside, and price didn't need to go down and come back because it has already the liquidity needed after this big manipulation. So as you can see, price make this change of character here. If I go more deeper, follow this order flow here, this order block, sorry. Price after here breaks internal structure, and price come back to mitigate this order block here. After this big manipulation, price moves to the upside very fast. It is during the night, so this is not a problem. It's during the easy session. And so here, as you can see, price creates a big leg, which gives us a demand here, a very nice demand, because here we have many mitigation that it's hard to use. Okay, when we have this kind of stuff, generally price, when they will come back, it will just break all of this liquidity. Here price comes back into maybe in a higher time frame order block. Okay, start to switch here from supply to demand. So here we have a little shush to the upside. price follow the demand here. Price break structure, follow the demand here. Price break structure. In this case, price follow this decisional here. Okay, as we can see, we have big mitigation in M1 following the extreme here. Here swept a little bit liquidity. Price follow this here order flow before breaking this high. By breaking this high, we have a lot of sell stop, buy stop, sorry, and maybe some other resting orders. And when price break this structure, so the breakout trader are here for buy, what price will do in this case? Sweep all of the mitigation that it creates before and come back into another block that is unmitigated to swept all the sell side liquidity before taking the other block, the resting orders, goes up, break the structure again. And you will see every time the same stuff on the market, guys. Okay, you will be able to see those things in M15 and 1 minute. Sure, you have to follow an item frame bias, but here I show you for an intraday perspective. Okay, in intraday we follow the M15 trend, but we have to understand that we have item frame bias that hunters. For example, here I choose this example for that. Here in M15, okay, we just do that to be able, okay, here in M15, okay, it's sure we are bearish, but if I go into the H4 time frame here, for example, okay, here we can say, okay, we are bullish, but when it's hard to see those things, I go into the daily time frame to have the more time frame and the more high time frame view possible. And if we go here into the daily time frame, we can see that we were breaking structure here, okay, breaking structure to the downside, so we were trading into this leg and we are come back into the middle of the leg, okay, we sweep this other block, this supply, so it gives us a lot of liquidity, and that's why I can follow the bearish trend here. But because if I followed only the HY was okay, I can buy, I can look for buy, but here with this higher time frame I can say okay, I can also look for sell and follow the order flow. But it is a thing to build, okay. Here I show you the mitigation process into the M15 and the 1 minute, because we will use it more than the other time frame, but it's also the same with the H4 and also the daily. So I don't use the daily always, but I use the daily when the H4 isn't very beautiful and isn't very understandable. But in intraday I just follow my M15. When price comes back into an M15 supply, I'm waiting for a shift from demand to supply in the lower time frame, and then I follow the order flow on the lower time frame to join another block. Or if I follow the trend, so for example here, if I follow the trend and I here into I look for a sell into this supply, and I know that I'm in a bearish structure, I can look for a sell until the next M15, so I can look for a break of the structure, because I'm in a bearish market, and the purpose of the mitigation is to break the market to the downside to continue its trend. The mitigation process is a really important process to understand, so don't try to rush it, okay. It is more complicated than it seems, so you really have to backtest it and to apply them to your chart, okay. I'm here for your question every time, and I hope this video helped you to understand everything and to apply them to your chart. Now you know how I use my mitigation and how I follow the order flow into the market. So I see you on the next video, guys. Bye bye.